The world economy was supposed to slow down. Tariffs rising, trade shrinking, a ticking time bomb. But guess what? It's still standing. The OECD says global growth will hold near 3.2% next year, resilience nobody expected. Yet beneath that calm surface, currents are shifting, and one wrong move could flip the entire system. Picture a lone tightrope over towers. Balance defines this cycle. Despite a global tariff war and weaker manufacturing, the global economy keeps surprising everyone with strength. Consumers keep spending, companies keep investing, especially into AI, the new engine of growth. Key takeaway: spending and AI investment keep momentum alive. AI data centers, chips, and models are pulling capital into the future-facing parts of the economy. Even with friction at the borders, activity refuses to stall. Spending on services remains resilient. Travel, upgrades, experiences. The lights are still on, and brighter than forecast. A steady baseline growth track is the surprise of the cycle. Call it resilience with a side of stubborn. But the cracks are growing. Manufacturing in the US, Europe, China, all weakening. Trade is slowing as tariffs reshape supply chains, hurting consumption and business confidence. So are we winning or losing? This resilience feels like a house that survived a hurricane. From the outside, the walls are still standing. The roof is mostly intact, and the lights are on. It looks solid, almost defiant against the storm that just passed. But we all know that looks can be deceiving. A house that endures that kind of pressure might be hiding deep structural cracks beneath the surface. The foundation could be compromised. The support beams weakened, waiting for the next gust of wind to bring the whole thing down. So the big question isn't just how the economy is still standing, but for how long. AI is the hero, for now. But if investors are dreaming bigger than reality, we could be building the next bubble. Watch the bubble swell on charts, prices stretching past earnings reality. If this bubble pops, even economists won't be able to say, "Told you so," because they bought the dip too. Everyone is so excited, and for good reason. It has the potential to change everything, but excitement mixed with billions of dollars can create a very dangerous cocktail. It's a game of musical chairs. Everyone assumes they'll find a seat before the music stops, but the music always stops. Then the bubble bursts and wealth evaporates in an instant. The world is splitting into economic camps again, a new era of fragmentation. Central banks warn this could keep prices high and policy unstable. One world becoming many. Separate supply chains, technological standards, and financial systems raise costs and complexity. When major economies stop coordinating and work at cross purposes, the risk of a misstep spikes. It's walking a tightrope without a safety net, a dangerous game where the whole world is the prize and the casualty. The global economy is walking a tightrope. One side, AI-driven growth. Other side, trade wars, inflation risks, bubbles. The question isn't if something will shake the rope. It's when. One sudden shock could be the gust of wind that sends the walker tumbling. Across the skyline, the walker steadies, each step measured, cautious, fragile resilience. Stay ahead of the global shift. Hit follow. EconMatrix. Follow for more global shifts, maps, markets, and policy decoded weekly.